I really wanted to thank you so much, Matt, Stacy, Jim, and Keith for coming today. What we've got is a beginning of a series on the Financial Rescue Caucus, which is designed to really pinpoint in a bipartisan way areas in which we can use our financial information, statistical information, and economic analyses to craft good public policy for the Commonwealth and keep the Commonwealth of Pennsylvania from going the wayside of what's happened in Illinois and candidly Puerto Rico as well, and we're starting to experience in other states. So what we wanted to do in the beginning part is have the independent fiscal officer, Matt, thank you so much for coming in and doing it. Stacy, thank you so much for being here. We are recording this as well to be able to provide to other members, and it'll become part of a financial literacy series as well. And then we have Jim and Keith, thank you so much for coming down from our CPA firm who is doing the audit for the Commonwealth to provide the presentation. So what I thought we'd do is go around the room and ask each to introduce yourselves, and then I'll finish up. We'll do it very quickly. Then we'll start off with Matt for about 15 minutes or so, you said, and then Jim and Keith for about another 15 or so, and then the members will ask questions.
My name is Matt Niddle. I'm Director of the Independent Fiscal Office.
My name is Keith Novak. I'm a principal with Clifton Larson Allen, external auditor for the Commonwealth.
Jim Kreiser, I'm a principal with Clifton Larson Allen. Help work on the external audit jointly with the Auditor General.
Stacy Knable with the IFF. I'm Representative Dawn Keeper. I'm from the 92nd Legislative District.
And Representative Chris Dush from the 66th Legislative District.
And I'm Representative Frank Ryan from the 101st Legislative District. So Matt, we'll go ahead and start with you.
Well, very good. Well, thank you for having us. It's a pleasure to be here. What I thought I'd start out with is just to give some highlights from the report we just released last Thursday, which is the Economic and Budget Outlook for the state. And just some background on the report. By statute, we're required to put this report out every November 15th, and it requires us to look at the demographic and economic trends that will affect revenues and expenditures over the next 5 years. And as part of that, what we do is we make projections, and then we combine the two, and we try to analyze whether it appears that the Commonwealth has a structural deficit or surplus over the next 5 years, and to try to identify the causes. So with that, what I'll do is just touch on a few of the highlights of the report, and what I'd like to start with first is on page 1 on the executive summary, and I'll just give you the highlights of our findings. So on page 1, we have projections of the revenues and the expenditures for the state. And you can see for fiscal year 16-17, we had a deficit of about $1.5 billion, which is then carried over to 17-18 due to the revenue package that was recently passed, and I'll touch on that briefly later in the presentation. We do think the 2 years are now in balance, and there's an overall surplus of about $80 million. 79 is our projection. Now going forward, we do have projections of shortfalls. Heading into next year, we have a shortfall of $988 million, and you can see that's growing to about $2.2 billion in the out year. There is a special transfer that occurs in the last year that I'll touch on later that's causing some of that shortfall. I would like to note as well that when we do our projections, we do assume that discretionary funding receives inflationary increases. So oftentimes that's not assumed on a so-called cost to carry budget where discretionary spending is flatlined. And if we made that assumption, the number of $988 million for 18-19 would be closer to $600 million. So with that, let me just walk you through the report. And again, I'll just pick out some of the highlights. I won't spend a lot of time. But in the first section of the report, we look on the demographic outlook. And I'll just touch, if I could, on page table 2.1, page 6. And here we make some demographic projections over the next 10 years through 2025. And these projections are from the state demographer, Pennsylvania State Data Center. So we work with them to make the demographic projections. But I'll just call your attention down to the bottom of the table where we have a summary for 4 age groups. The first age group being what we call school age from 0 to 19, then the working age population from 20 to 64, the retirees from 65 to 79, and finally the elderly population 80 plus. But 2 results will immediately jump out at you if you look at the columns, the gain or loss columns, where we're looking over the 5-year period from 2015 to 2020, you can see that the population aged 20 to 64 is contracting by 102,000 individuals. And then from 2020 to 2025, another contraction of 65,000. Now conversely, for those aged 65 to 79, we have a very large increase over that time period, 264,000 and 284,000. So these underlying dynamics are driving a lot of the trends that you're seeing in the report. First of all, there's a contraction of the working age population, and more of the tax burden is being shifted onto them. Conversely, if you look at those who are retiring who might need long-term care services, they're growing very quickly. And in the report, we talk about how this demographic trends are impacting our revenues and expenditures. In this section, I'd just like to draw attention to 2 pages later in figure 2.4 on page 10. One of the things that demographers do is they look at dependency ratios, and we have 2 dependency ratios here, but I'll just draw your attention to the black line. That line is the ratio of the working age population, age 20 to 64, to those who are age 65 and over. And you can see back in 2012, that ratio was about 4, so that there were 4 working age population to each retiree. But due to the retirement of the baby boom generation, you can see by 2030, that ratio then falls to 2.4. And again, this is just drawing attention to the fact that more of the tax burden is being shifted onto a smaller group of individuals who are age 20 to 64, who do pay the majority of the taxes in the Commonwealth. So with that, if you just continue to go through the report, the next one I'd like to turn to is on page 29. It's in our revenue section on table 4.1. So here we make projections of all the general fund revenues, and you can see the bottom line, what we call the baseline revenue before the revenue package. If you look across all of the years, it's growing by about 3.3% per annum. If you do go out to the final year of our forecast in 22-23, you'll see a relatively low growth rate of 2.1%. And the reason for that is there's a new sales tax transfer of $480 million from sales tax over to the transportation fund. And that's in statute right now. And we're beginning to see it at the end of our window, and it's constraining the growth rate in the out years. Now below that, you'll see we add on our revenue package, $2.3 billion in the front end, and then we get our bottom line growth rate, nearly 10% growth for this year, but again, averaging about 3% growth in the out years. Just a note, if I could, on the next page, on page 30, in table 4.2, we then have our estimates of the recent revenue package. And I'll just pick out a few items. In the current year, we think it's going to generate about $2.3 billion. Most of the monies come from the securitization of the Tobacco Settlement Fund, $1.5 billion we've assumed. There are some transfers from the JUA and other funds of $500 million. And then right above it, you'll see we have an estimate for the gaming expansion of about $103 million. So over time, you can see that the revenue impact trails off, starting at $2.3 billion, but by the time we get out to the end of the window, we think it's about $70 million. Turning to the next section, I'd just like to say a word on the expenditures on page 42 of the report, table 5.1. So for our expenditures, we actually meet with the executive agencies to try to get a sense of the upcoming cost pressures. And we can also do some research on the current budget to see what's driving the various line items, the various programs. But if you look at the general fund expenditures, what you'll find is for this year, they held the line on expenditures. There's no growth, it's essentially flat. But going forward from there, you can see for next year, we're projecting about 4.9% growth, and then 5.4, and there are various reasons for that, cost pressures that are building up that we can talk about further if there are questions. You can see most of the cost pressures, not surprisingly, are here in human services. So there's 5% growth and then 8% growth in the next year following. You'll also see down on the state police line for next year, we have 11.5% growth and then 19.9. And again, that's due to a provision in statute right now where there's a shift, a limited shift from the motor license fund coming over to the state police, and therefore the general fund has to pick up an increasing share of the costs.
And just here, Representative Seth Grove has just joined us as well. Seth, good morning.
So I'd like to finish, if I could, in the appendix. And in the appendix on page 75, table 8.3, there's a new section of the report that we added this year. When we make our economic projections for the purpose of this report, what we assume is that things return to a long-term steady state growth rate, what's normal for the Commonwealth. So we don't build in a recession or a downturn or even a mild slowdown in the growth rate. And the pertinent question is, well, what would happen if that actually did occur? And in this table, you can see the impact of the last two recessions on the general fund revenues. We had the mild recession in 2001, and then we had a severe recession in 2008. And these are the impact on the general fund growth rates. So for 2001, revenues actually fell by about 2.6, but in the severe recession of 2008, they fell by 7.3 and by 1.5 the next year. So a very back of the envelope calculation, if we're projecting that revenues are growing by about 3.3 and they're actually falling by about 2.6 for a mild recession, that 6 percentage point differential in the growth rate implies about a $2 billion hit to revenues. If we have a severe recession, like the last one, then it's about a 12 percentage point differential, and the hit to general fund revenues is about $4 billion. It's double that. So we haven't built any of this into our projections, but we raise it so policymakers will be aware of the implications. And in the latest Wall Street Journal survey of economists, they're putting the potential of recession at 15%. If you take that percentage over 5 years, it implies that over the next 5 years, a recession is more likely than not, at least in one of those years. So this is just for informational purposes. We don't try to put a number to it because it's very difficult to. Every recession is different. They last different durations. But we thought proper to raise it, and it's in the appendix.
Let me ask you a question for the benefit of everybody. For Jim and Keith, do you have time that if we did it a little bit differently and asked Matt questions now? Sure. Is that work for you guys? Sure. Because I think some of the members might have some questions as it is right now. One of the questions that I have is, under this analysis, you're not presuming any increase in the PIT, and that if increase in PIT rates did occur, is it possible, obviously this is more of an assumption, is it possible that you would expect that the flight of people out of the Commonwealth might be greater if that occurred, if there was an increase in PIT, or are the data not that substantive to confirm that?
So that's a good point, and there are a lot of studies in particular that looked at Illinois and New Jersey who have had these millionaire surtaxes. And from the studies I've seen, some find that it is causing folks to leave the state, and others are inconclusive. So okay. We would probably defer on that. Okay. If there was a PIT.
We can't say conclusively what impact that would have.
From the studies I've seen, I couldn't say, yes, it is definitely causing that.
Would it be rational to say, based upon the study that you had done for me about the property tax and this analytics, that our tax favorability status for seniors vis-a-vis working families is causing some of this problem, or is tangentially causing some of the problem?
Well, I think it is the case on the demographics, because you can see the older population, that more of the burden is being shifted to those age 20 to 64 who are working. And I would say, given our demographic projections, that will only increase over time, that more of the relative burden is going to get shifted on those of working age.
Fantastic.
Thanks for everything you do. The expenditures, there's some in Harrisburg that say your expenditures are wrong because we won't spend that much money. Now, you do your analysis on current policies.
Yes.
So it is taking expectations from Department of Human Services, their population growth, demographic growth, and costs associated with that, and you build in those numbers, correct?
That is correct.
So if we want to change those numbers on expenditures, we have to change the policies that are driving those numbers moving forward.
It would call for a fundamental change such as that about the service populations that are receiving the services.
Okay. I'm trying to find the page. huge. Okay, the table 5.3, annual change in expenditures, the cost to carry. Is it possible to break that down into kind of specific policies that are driving that? So the certain human services, the 546, like, do you get specifically what's driving those costs? Like, which programs are attributed to the 546?
Yeah, so we could itemize every single one of those, and all the programs are in one of these lines, so that would be possible if there's interest.
Yeah, I would love to see that. Now, criminal justice is one that probably needs breaking down. Motor licensing funding shift is straightforward. That was fiscal code language. General obligation debts, I think, pretty straightforward. Pension contributions is straightforward. Plan con, straightforward.
Yes.
So probably human services, criminal justice, and then the required and discretionary. Are they just other line items that are combined?
Yeah, so there's
Okay.
probably dozens of line items that are in both of those that, again, could be broken out if there's interest in that.
Yeah, I would love to see that, because that'll help us, I think, make better decisions moving forward. To say at minimum, you know, it's this program, and then we can go back to Department of Human Services and saying what can we do to mitigate these costs moving forward, or what are you doing to mitigate those costs moving forward? So that's
Very good.
great. This is probably one of the best tables I've seen in a while to
Okay.
just try to help us manage. I'm not sure everyone needs a breakdown, but getting a more comprehensive breakdown so we know specific line items and stuff would be, I think,
Sure, we'll,
huge moving forward.
we'll issue a letter and we'll
Yeah.
have the detail appended
Okay.
to that, and we'll put it on our website.
Awesome, thank you.
Yes, Dawn, any questions or comments?
Not yet, no.
Chris?
Matt, the cohort summary on page 6, table 2.1, the reduction in the number of people 20 to 64, what, if you wouldn't mind elaborating a little bit on what's driving that?
Sure, there's there's two primary causes. The major cause is purely the baby boomers leaving that age cohort and Generation X filling it more and being a smaller generation.
Right.
So that's one of it. The second thing I'd say is just a long-term decline in birth
Birth
rates that are now showing up.
Okay. Are we are we still a net loss as far as people moving out of the state as well?
Yes, in fact, if I can, since there's a table on that in the report, if you go to table 2.4 on page 14.
Thank you.
So the number you'll see here is a negative 15,000, and that's an average rate or level over the period 2011 to 2015, not a sum over the 5 years. So based on the census data that are used for this table, they're saying on average about 15,200 residents left the state every year from 2011 to 2015.
Do we have any information on what's driving that?
We don't have the causes of why they're leaving. We do know if they do provide age detail. So if you look at those age 60 to 69 and 70, you can see that they're migrating to Florida, North Carolina, and Texas. We suspect it could be to weather or lifestyle or even lower taxes. That's very possible.
I'd also like to, I'm kind of interested too on the age groups that are working age people, how many of those are migrating out, as well as, I know we've got a significant number of the elderly moving because of the weather, but on the working age people, I'm very keen on finding out
The reasons for the
the
departure.
reasons for the.
So we can try to dig a little deeper here, see if we can identify the reasons why folks are moving out age 20 to 64.
That would be great.
Okay, we'll take a look into that.
And I just want the record to reflect, I'm one of the ones that moved from the 64 group into the other group. So I help causes. Matt, one of the things, it looks like from the report, and for the benefit of everybody and those that are listening to this as we put it out on a link, I'm gonna have a link to your IFO report on that, and would encourage all the members, we'll send it to everybody in the Financial Rescue Caucus that we can then put on our own websites so that people can get to it, because this is extraordinarily well done. With that, why don't we go ahead and go to both Keith Novak and Jim Kreiser, and I wanted to explain to you why this is so very important as well, is to get a real proper financial picture of a Commonwealth, you need the budget outlook going forward, as well as what the auditors have found. And by way of full disclosure, Clifton Larson Allen, in my prior life, prior to coming here, I was an audit committee chair of the Archdiocese of Baltimore, for whom your firm did a great deal of work for us. I'm no longer associated with that and no longer have any relationship with Clifton Larson Allen, and did not at the time that the state chose you to be the auditors. But one of the things that I noticed as a CPA, whenever someone in the legislature was upset with the way something was going to the Commonwealth, was, well, let's audit it. And I'm thinking, I'm not sure you really appreciate what the intent of an audit is. And so Jim and Keith and I had met about a month ago to get together, and we talked about what the issues are, and they were more than kind to, come in and discuss the audit types and impact for governments. And so that's the purpose of the conversation today as well. So Jim and Keith, thanks so much.
Thank you. So I'll let Keith run through most of this. He is our assurance leader in the area, and he does sign off on the technical aspects of the CAFR for the Commonwealth. But we did want to thank you for the opportunity to be here today. Thank you to Representative Ryan for the meetings and discussions that we've had. As he mentioned, we were kind of asked to put a little bit of a presentation together over, what are the different types of audits that governments utilize and employ throughout their organizations? What are the impacts of those? What are the implications of each of the different types of audits? So with that being said, I'll let Keith kind of run through quite a bit of this, and there's a couple of these audits that are more in my area, but we'll let Keith handle the bulk of it.
And may we scan this in and post it online? Sure.
Absolutely. I can even email it to you and Julianne.
Could you please?
Absolutely.
Okay, good morning. One of the things, as Representative Ryan indicated, is whenever there's a problem, everybody says, well, let's go audit it. Let's have an audit. But what does having an audit mean? And is having an audit the right thing for every situation? So what we've done is we've put together a list of what we call audit types, but it's not really audit types, it's really assurance services and other services that can be provided. So you kind of get a feel for what it is that we do, or what it is that can be offered. The first section has to do with true assurance services. And they consist of financial statement audits, which most people are familiar with. They're GAAP audits, and that's the Commonwealth's CAFR, if you will, done in accordance with certain standards, and we'll go into that. The second is what's called a performance audit. The performance audit's different from a financial statement audit because a performance audit has to do with performance. It doesn't necessarily have to do with numbers, and we'll get into that a little bit more. Then we get into what we call SSAE 18 assurance type of engagements. And they consist of examinations, agreed upon procedures, and then what we call SOC reports, or System and Organization Control Reports. And we have a separate slide on each of these, so we'll get into those slides. The next type of audit can be done is an internal audit, which is a totally different type of audit than anything that we've discussed so far. And then we have program or single audits, which are audits of specific programs or audits of federal grants. And those are more compliance in nature. And then lastly, general consulting services, where you have a problem and you want somebody to go in, take a look at it, and figure out what the root cause is. So from a financial statement audit standpoint, first off, auditors are generally what I would call umpires. We come into the game and we call balls and strikes. We figure out what's right, what's wrong, and have people basically play the game correctly, prepare the financial statements in accordance with the rules. And the rules that we have to follow are generally accepted accounting principles, and then audit standards. Now, for the Commonwealth and for most governments, we follow generally accepted government auditing standards. And that's a standard slightly above generally accepted auditing standards. But it's a group of standards that says this is how you do an audit. GAAP says this is how you record transactions and present them. Audit standards say this is how you actually perform the audit and what you have to do. In a financial statement audit, we express an opinion on the fairness of the presentation of the financial statements. We're not saying the numbers are 100% accurate. We're saying that they're fairly stated, and generally the wording is fairly stated in all material respects, because materiality becomes an important issue. Keep in mind that to put the transactions into the system took an army of people a whole year to do. And so when we come in to do the audit, we're looking at samples, and we are not looking at 100%. Because to do that, we'd need a whole army of people to come in and probably spend another year just looking at everything. And believe me, you wouldn't want to incur that cost. So it's subject to materiality. It's not designed to address fraud or abuse. However, we're supposed to look for it, and if it shows up, we have to deal with it, but it's not designed to find it. And then lastly, the rules that we have to follow from a generally accepted accounting principles standpoint are Government Accounting Standards Board rules. That's a separate standard setter than private sector. Yes, ma'am.
So, I'm gonna interrupt.
Sure.
So you currently provide these services for the Commonwealth, correct? Right. Okay, so a conversation we had yesterday was when we were going through all of our special funds, and we were looking at, I'm sorry, and we were looking at the SAP system and numbers that we were getting from the treasurer, and we would present the numbers from the treasurer, and we would get told from the other side, oh, those numbers aren't accurate, these are estimates. So one's working on an accrual system, one's working on a cash flow basis. So you're monitoring both of those. You're doing a financial audit of both of those. How do you decipher what's accurate in there?
Well,
And that methodology.
Yeah, through the process, the financial statements of a government are extremely complex, all right? Extremely complex. You can have a budgetary basis of accounting, what's called a modified accrual basis of accounting, and a full accrual basis of accounting, all occurring within the same financial statements. And the budgetary basis could be on a cash basis, it could be on a modified accrual basis, it could be on an accrual basis, or it could be on a basis that somebody else came up with.
Can I ask you a
Yeah,
favor? You
sure.
need to put that in the chart, because that was
Okay.
brilliantly said. That was probably the best I've ever heard that
Right.
said.
Okay, but
So-
before we go further,
Yeah.
Here you said you have generally accepted government auditing
Standards.
So those all fall within there?
Well, okay, those are generally accepted accounting principles, okay?
Okay.
The difference is, accounting principles say, I guess to put it back into an analogy of sports, okay? The rule book for, how you call balls and strikes would be generally accepted accounting principles. How the field is set up and how the game is having to be played would be akin to audit standards, okay? The one tells me how I've got to handle a certain specific situation. The other gives me a broad guideline on how I accomplish what I'm trying to accomplish, okay? Audit standards are for auditors, not for management. Management has to follow GAAP. Auditors have to follow audit standards to ensure that management is complied with GAAP.
And particularly here, right, Treasury has their own accounting system
Right.
separate from the SAP instance that the governor's office utilizes. So that does lead to some different configurations, different, to Keith's point, modified accrual, full accrual, how the chart of accounts is set up in each, as well as just timing differences of the interfaces and posting of the transactions, which on the governor's side might post immediately, and till that flows over to Treasury to show up on their side, there could be timing differences and issues as well.
Yes,
From
as
a
you,
policy standpoint, and you're looking for transparency, that gives the appearance of attempting to manipulate or, so there's those questions that will continue to arise arise if you have both of those systems.
Correct, and through the efforts that the Auditor General, as well as our firm CLA does throughout the audit, we do have to do a number of those reconciliations of why does it show up this way here versus on Treasury? You know, what, were there timing differences? Can we still trace that transaction through after the fact and ensure that it is posting at some point, particularly for the cutoff testing at year end, that becomes incredibly important. Are they all, you know, over at Treasury as of a certain point?
We audit a number of states, commonwealths, as well as counties, large pension plans, et cetera. And throughout those processes, these things come up. These are not, you know, exclusive to the
Correct.
Commonwealth of Pennsylvania. A lot of times when you have a separate treasurer, you know, who's separately elected or appointed from everyone else, they will run different systems because the SAP system may not be the best system for accomplishing what they're trying to accomplish. And so at the end of the day, though, when you're bringing the financial statements together, you have to marry the results from the two systems. And to the extent that you've got a cash-basis system, adjustments have to be made to bring it in line with either an accrual basis or a modified accrual basis system. And so those are part of the adjustments that occur during the audit process, which are then audited by the auditors to make sure that those things were done properly. Okay.
Is there any state or locality that has like a uniform auditing accounting law to bring uniformity and parity within state government to get everyone on the same page?
Not to my knowledge.
I'm not aware.
And what I was going to suggest, Chris, did you have a question as well? Because I was going to go ahead and suggest, because this thing will really tie into a great deal of other things. A lot of questions might get answered when we get through it.
Yeah, I think we'll get to one later on uniform grant guidance. I
Yeah.
mean, the Fed does a very good job of saying,
Oh.
here's how all of our,
Did you just say the federal government does a good job?
well, from establishing a policy, that every state will audit and review federal expenditures the same way, they have a fairly good comprehensive program to ensure that all of the states and municipalities even follow the same rules and requirements for how they're going to audit the compliance with federal expenditures. But Keith?
One of the things that you'll see that came up, and when I first met Seth a year ago, he had a bill called the SMART Act, and so I made a comment, and Dawn, the work that you had done over the summer with this thing really was pinpointing how critical it was for people, other legislators other than Dawn and Seth and Chris and the other part of the group to see what was going on, which then makes your job that much more difficult to see which data point are you using.
That's what I'm wondering, like, I don't know how you came up with this. I mean, to marry all those systems, those numbers, and making sure you have
No, so we
accurate.
didn't attempt to merge them, we were just going from the SAP system.
There you go, there you go. So that allows the other side to be like, well, those numbers aren't right. Well, you know, because if we look at it and we apply this and this, our projections would say something that might contradict that. That's my concern. is that-
And that's why I think we need to do this. That's why I wanted to go ahead and do it. So if we could.
I mean, there's another point too, because the more people looking at it, I mean, the brilliance of the independent fiscal
Right.
office is they're independent.
Yes.
There's no bosses over there. They're just presenting the information as they get
As
it.
they
And so are your auditors are independent as well.
We're required to be independent.
Yeah.
So we.
Same thing with Treasury. Treasury is an independent agency, so they're providing an independent analysis outside of the governor. While they may be the same party, it's still good to have as many independent entities looking at it, looking at the numbers. They may be a little different, but you get a better picture because his presentation, Treasurer's presentation, the Budget Office presentation, and our 4 appropriations presentations are all different. But within that, you get a better financial picture of what's really happening too, so.
And what I would just encourage is think about the nature of the conversation we just had, and if someone's watching this for the first time, their head's got to be exploding right about
Right.
now in the
Well,
process.
and my other concern is that, as we all know, we were challenged all summer. Your numbers aren't accurate, that number's not right, this is in commitments, that isn't in commitments. Well, this is encumbered, but it might not be in commitments. You know, there's standard protocol, and there's different rules depending on who you talk to.
Right, and that's the reason for we doing it. So anyway,
Okay.
why don't we keep going on? Because you'll see a lot of these questions will be answered as we come in.
Okay, so that was the financial statement audit. The next audit is a
May I
perform.
ask one
Sure.
question on that comment?
Get right
I
ahead.
think it's important. What is the materiality standard for fraud? And I know the answer, but I think it's worthwhile to state it.
When you say for fraud,
If you find fraud,
oh,
is
if
there
you say fraud,
materi-
there is no materiality.
There we go. That's why I want you to be aware of. When we use the term materiality in accounting, you're talking about general process. If you find fraud, there is no materiality. A penny of fraud would be investigated deeply, correct?
Correct.
And I just thought I wanted to
But
make that
again,
point.
the procedures themselves within the audit are not designed to detect it.
That's correct.
But
That's
as we,
great.
as we encounter it,
Right.
correct, there is no materiality of what, in which then.
And your management representation letter asks if the control people are aware of any fraud.
Fraud. And we have fraud interviews and inquiries with
Right.
most all major secretaries and bureau directors.
And the reason for no materiality when it comes to fraud is when you find something, that may be the tip of the iceberg. So you may find a penny, but that penny could quickly evolve into something much larger. And throughout my career, I have run across frauds where we find a little bit, and then before you know it, you've got a major iceberg, but it's all under the surface. So, okay, so the next type of audit is what's called a performance audit. And this is a very unusual type of an engagement in that there's no real standard report for the way you do this, but it's an audit of how something is operating or how it's operating with regard to the way it's designed to operate. Okay, so for instance, if you were worried about, and I'll just use this as an example because we actually did one, how your child services division was working and whether there were ways that they could streamline what they were doing, whether they were meeting the requirements that they were supposed to meet, et cetera, we would put it into the framework of a performance audit where there would be specific performance measures that would be identified, and then we'd go in and audit to determine whether those performance measures were being met. Another good example would be a police department that has certain metrics. Okay, well, how do you know those metrics are good metrics? How do you know that those metrics were properly measured? And how do you know they're being properly utilized? And so a performance audit would go in, take a look, how are the metrics put together? How are they monitored? How are they utilized? And does that make sense? And what are the findings? Okay, so it's not necessarily a financial audit. It doesn't necessarily provide an opinion, but it does conclude on how the objectives are being met or not met.
You're getting those defined objectives from statute or regulations or?
Or they can be self-defined objectives, right? So every 3 years, the governor's office has the right to perform a performance audit of the Auditor General.
Okay.
They define, here's the 5 or 6 objectives that we'd like to audit against. And again, then the auditor executes that audit to evaluate the achievement of those objectives and concludes on whether or not those
And
are
also,
achieved.
And that's an internal audit?
no, that is
That's
a
a
performance
performance
audit.
audit, because it's
Done
done, it's
by-
done in accordance with Yellow Book standards.
But who performs the
An
audit?
An
external auditor.
independent external auditor. It has to be independent.
Right. The, in a performance audit, a lot of times you're also looking at how the organization is performing against set metrics that are elsewhere as well. So for instance, on a situation like a performance audit of an auditor's office, how quickly are you getting your reports out from the time that you finished? How long does it take you to do an audit? Does that make sense? Okay, you're here, how does that compare to other organizations of a like size and a like type? Are you doing better? Are you doing worse? You about the same? Okay, if your self-defined metrics are to get an audit completed within 6 months, from the time we start till the time we finish and out the door, and it's taking you 9 months, you're not meeting, okay? If you're getting it out in 4, you're doing better, and then that may lead you to other conclusions. So,
We'll see a lot of retirement plans that we work with in governments, right? The contracts have
performance guarantees of how trades are handled, how investments are handled. They'll do a performance audit around those performance guarantees in the contract. Very well stated, transactions and trades have to be posted like this. We won't be investing in anything below AA minus or what have you. And you go do a performance audit. Are you in accordance with those metrics?
So those are, I'm sorry,
Oh, I was just gonna say, so you're saying performance audits should be done by an independent entity, correct?
has to be.
They have to be.
They have
They
to.
shouldn't be. The Yellow Book standards require that the auditor executing it be independent of
The
of
Office of the Budget, under the Administrative Act, has the ability to do performance, I guess, reports, I would say. It should probably be
The Bureau of
audits.
Audits,
Yeah.
correct? Yep.
But they're doing it for state government.
Yeah, so I guess the
Are
word
they-
independent, I probably shouldn't use that word. I guess Yellow Book defines it as objective. And through the reporting of the Bureau of Audits, the director, Brian Lyman,
Okay.
Brian has a reporting line to the Audit Committee of the Commonwealth. As reporting to the Audit Committee, he's administratively separate and objective from the Office of the Budget or the areas in which he would be conducting audits. So if he goes out to do an audit at PennDOT or the LCB auditors within the Bureau of Audits that are executing those audits, he's objectively independent of LCB because he reports to the Audit Committee, not per se up through the line of the governor.
All right, so just so I can wrap this.
He is, and it's an oddity, right? I mean,
So he's hired by OB, but his job and the discretion, he's not, when he's doing an audit, he doesn't answer to the budget secretary, so to speak. What would stop the budget secretary to say, you're fired, bring someone else in?
probably not much.
All right,
Probably not much, and that's the difference between the independence and objectivity.
okay.
All right.
I guess I probably did overstate. There is a difference in the way the Yellow Book independence rules that it stated that you'd be objective.
So those are audits. So when you're talking about audits and you use the term audit, you're generally falling into one of those categories, okay? There are other things which we call assurance services. And assurance services are services that provide you with assurance about something. It may either give you an opinion or it may just give you comfort. And they are all covered under what we call SSA 18, and that's an audit standard acronym. The three basic ones are examinations, agreed upon procedures, and then system and organization controls. And Jimmy will address the system and organization controls because that's what he knows inside and out. Examinations, though, are, for lack of a better way of putting it, audits that are slightly watered down, okay? The standards are a lot less, but they are to give an opinion or an assertion on a specific matter, either a schedule or a subject matter. That, for instance, if you had a loan that had a provision that said you had to have a certain ratio, we might do an examination to examine the assertion by management that they met that ratio. Okay, so it's an assertion, and we are going in and opining that yes, your assertion was correct, or no, your assertion wasn't correct. Okay, it falls into assurance because it's not really an audit per se, but there are standards around them. The next is what's called an agreed upon procedures. And an agreed upon procedures engagement is where management or the users determine what they want us to do, and then we go out and do it. And then we report back, this is the result of what you asked us to do. And generally, it's a very specific set of procedures, and it doesn't allow you to draw a conclusion about an entire population, whereas an audit or an examination would. It just allows you to draw a conclusion about that population or that sample that was looked at. So for instance, let's say you had a process that said that, all applications had to be signed by an individual, a certain individual, but there's, 20,000 applications. You may say, well, we want you to look at 5% of the applications and report back to us, what you find. That would be an agreed upon procedures. On the other hand, let's say you wanted us to examine the assertion that all applications were properly signed. Then we'd be looking at an examination because you'd be saying, we want you to give us a conclusion about this assertion. And it would be left up to us as to sampling techniques, sample sizes, et cetera, to draw a conclusion about the entire population. Whereas in the other case, you're saying, we only want you to look at, 5% up to 25, because to look at that many would just take too long.
Right. And in the AUP, there'll be no opinion. Right, so
It's
if
just
we test 5% of those applications, 10 of however many we tested weren't signed. We don't tell you why, the auditor doesn't say here's why, here's what may have driven that, or in our opinion, it's still reasonable because there was a rationale for why those 10. There's no conclusion drawn, just you purely get the results of those procedures that were agreed upon.
Okay. Now, again, each one of these has a specific use and a specific reason for being utilized. But again, when you use the term audit, a lot of times you don't mean an audit, you may mean something else. And part of the problem that auditors have with legislation and with RFPs that come out, et cetera, that say, we want you to do an audit of this, we say, do you realize how expensive that's going to be? Because first off, we don't necessarily need to do an audit. Based upon what you want, maybe one of these other things will work out better. Unfortunately, the legislation reads it's got to be an audit. To give you a real life example, a large city came up with a law that said all departments have to be audited every 3 years in accordance with generally accepted accounting principles. Well, generally accepted accounting principles say you need a balance sheet, you need an income statement, you need in this case we didn't need a cash flow statement, but you also need to accrue expenses, and we need to know what all those items are. Well, they didn't keep their records that way, and that's not really what they wanted, but the legislation said it had to be done that way.
That goes back to, we brought up a point yesterday, is that we need to be utilizing the independent fiscal office to get fiscal notes on legislation, that you would be saying, okay, this is what the legislation does, this is the actual cost that you're going to realize in implementing that.
And one of the things that we do is I've got a bill that we're preparing right now that takes the work that you all have been doing all summer, and we're codified it into so that this is clearly part of that, so we can explain the differences. And then why it's important to have both together is as a system of internal control under the COSO standards that everybody keeps hearing me talk about ad nauseum, is that the auditors and the independent fiscal office really need to have a close at-the-hip working relationship, because if you see critical weaknesses in the control systems, the IFO should at least be aware of that. So when you're looking at determining, can I in fact rely on this data, it helps significantly in the process. And I'm about to say something. Normally I'm going to be very cautious about how I say it. So I don't want anybody to infer that I think this is going on in the Commonwealth. But the more complex a system is made, the easier it is to create an opportunity for fraud. And so if somebody's watching this, I want to be very careful. I'm not asserting that at all. It's just that sends up all sorts of operational red flags that we have to really be very, very careful about. Would you agree with that?
Agreed.
Okay. Anyway,
And
so
if I may, just one thing, I think at this point, I'd like to make the recommendation that we try and ensure that our executive directors of each of the committees that have any kind of possibility of doing this, or this type of legislation, drafting it, take a look at this video and understand this subject matter, because when it comes to writing that legislation, we want to make sure that we're not doing something that is going to end up costing the state a whole lot of extra money. We do need to do the financial accountability, but we have also got to make sure that we're writing these things in such a way that we're getting the proper type of examination or audit
Now,
done.
Getting back to that city example, what they really wanted was somebody to audit the revenues and expenses that had flowed through on a cash basis. But because of the way the legislation was written, it required a balance sheet to be created, which departments didn't maintain balance sheets. So that created a problem. It also required accruals to be made by department, and it required the auditors to audit a lot more information than really what they were trying to get at. And so that's why I say you have to be careful how you craft things, because using the term audit and then using the term generally accepted accounting principles, you may end up someplace that you don't want to be and end up costing considerably more. In my city example, I would say the difference in cost between what I envisioned that they wanted and what the legislation said was probably a factor of 2. Okay, so it was considerably more to do what they wanted the way it was written. And in fact, at the initial kickoff meeting, there were 3 firms involved. We all said the same thing. Are you sure you want to do this way? And they said, well, we've got to, because that's the way it's written. So the last one is a system, organization, controls. I'll let Jimmy go over that.
System and organization controls and internal audit, I'll speak to quite a bit. SOC reports, as they're called, the Commonwealth actually receives 40 or 50 of these each year from service organizations and vendors that they outsource services to. So primarily, we see these SOC reports with service organizations, as they're called. First Data, who processes credit transactions, or your custodians at Treasury, your financial custodians, Unisys that outsources your IT environment. They all provide the Commonwealth with SOC reports. These reports can be one of 2 different versions, a SOC 1 or a SOC 2. A SOC 2 is going to be based on trust service criteria that the AICPA defines, and primarily those are all IT related. So it's around security, confidentiality, privacy. We're seeing a lot of those these days. A SOC 1 is around financial services or transaction or processing related services. So HP does the Medicaid claims processing. They're processing claims, they're processing claims, they're doing subrogation and activities. That's a SOC 1 report. How are those financial transactions being executed? There's a number of other organizations that are really doing things purely from an IT perspective for the Commonwealth, and those reports are coming in as SOC 2s. So within a SOC 2, again, you're following a specific set of criteria that the AICPA defines. In a SOC 1, the service organization self-defines the control objectives of which it wants to subject to that attestation. So kind of to draw a parallel as well at a government level, it isn't just solely for what you consider a service organization or a third party. We do the work in Delaware as well. Delaware, which is different than Pennsylvania, but Delaware is probably more common to some of the other states that we see. By mandate, they have a few agencies that get standalone audits, right? So in the Commonwealth, all of your agencies are consolidated under the CAFR. In Delaware, their Department of Transportation and a couple others get their own separate individual audits, financial statement audits, and those are then rolled up into the state's CAFR. But if you're at transportation, all of your accounting is still done by Delaware's accounting office. So the accounting office actually does a SOC report so that transportation's auditors have something to say, we know how these transactions and accounting are all being processed on your behalf, since it's actually the central accounting office that's doing it, not the transportation, correct?
The SOC reports originated in situations where you had multiple auditors relying on the same control systems. So for instance, ADP is a great example. Everybody in the world, it seems, processes their payroll through ADP. Well, if I'm auditing an organization, I have to understand the controls surrounding the processing of payroll, not just at my client, but also what's happening at ADP. So if I didn't have a SOC report, I, as an auditor, would have to go to ADP and say, okay, I need you to run through your control system with me. But then the guy down the street who's auditing another company has to do the same thing, et cetera, et cetera. So you may have, hundreds of auditors needing to come in to look at the same control system. And that would create havoc for everyone. So the idea behind a SOC report was have one auditor, kind of like a pool reporter, if you will, have one auditor go in and audit the system, issue a report that can then be used by everybody who has their payroll being processed by ADP. But then that auditor also identifies controls that have to occur at the user's place of business in order to have a complete set of controls. And so the SOC report was designed to give us the entire picture of what the control system was and to tell us what we had to be doing on our end, or I should say our client has to be doing on their end in order to have a good, relevant control system. And that's part of the testing that we do. So that's the genesis of a SOC report.
So back in the day, that's how it got started, right? Unisys didn't want to have 100 of their clients all come in to audit them. We can get audited one time, share the report. As you can imagine, once the PCAOB came into account and Sarbanes-Oxley was enacted, these reports really took off. Because the other thing that occurred 20 years ago was companies would say, well, we don't do that. So you don't have to include that. We don't have to worry about that in our audit because we pay somebody else to do that. Well, after Sarbanes-Oxley, you weren't allowed to say, well, somebody else does that for me. You now had to take accountability for it yourself when you signed off on your internal controls or financial reporting report with the SEC.
And if we could, what I want to do is to make sure that, because there's about a 90-minute limit, that we want to make sure that the viewer is going to be watching this. But I did want to say something. This is why, in a lot of the cases, we're asking for management letters and SOC reports as opposed to just the audit, and then that would then provide greater input as well to the independent fiscal office. And we're trying to create that symbolism. That's why that SMART Act that you came up with was such a great way of doing it. And Dawn, the work you did with the system of controls this summer was so critical. So what I thought would be worthwhile is if we could hit some of the other main items and then open up for final questions so that we have editing timelines and things like that.
Right, so in internal audit, I'll hit real quick because we don't see it a lot. Usually the internal audits, to your point earlier, internal audits in governments we also often see being issued as performance audits. They could just as well be issued as an internal audit. The difference is it's not following yellow book standards. An internal audit really doesn't have to follow a standard, or generally the organization issuing the standards around internal audits is the Institute of Internal Auditors, the IIA. No, please, go ahead.
Some states within the General Assembly have an audit control mechanism. We don't, because we don't like oversight in this General Assembly. We basically tell the administration, feel free to do whatever you want, whenever you want. And then when the newspaper reporter picks up something, we'll then ask a few questions, pat you on your head, and let you go back to doing whatever you want generally. Some actually focus on that. Have you worked in a state that has an entity within the General Assembly that actually does some internal audits, performance audits? And how does that work?
We have states that have a legislative auditor for sure.
Okay.
I don't know if they often issue those as performance audits or.
No, my experience, and this isn't at a state level, this is at lower levels. When you have an internal auditor who is a legislative arm, if you will, they're generally going out and bird dogging issues that the assembly or the legislators specifically come up with. Okay, so it's more of a consulting type of thing. The other one that I'm real familiar with, which is a very large county, their internal auditor is really more of a budgetary function, looking at budget issues. Internal auditors can be used for any number of things, all right? By the term internal auditor, it means an auditor for the organization, hired by the organization in most cases, to do what the organization thinks is important at that time.
So most of the legislative they'll do a performance here, maybe a little more in depth over here, just direction of that General Assembly. They're not constantly churning over. It's more of a directed.
Again, it really depends. I mean,
Okay.
it can be very freewheeling.
Okay.
Okay. Jim used to head up an internal audit function at a major healthcare provider, and he can speak ad nauseum on internal audit, from that
And
perspective.
generally, the legislative auditors, the internal auditors, you're setting a scope based on risks that you identify with your organization, right? So the legislative auditors are often meeting with their representatives and their senators, and they get told, here are the risks that we're concerned about, and they go execute internal audits over those risks. Doesn't have to be financial, but it can be. Doesn't have to be IT, but it can be. It can be strategic, reputational, budget, whatever the risk may be. It becomes focused around risk. We've identified these issues or risks. Go audit around that for us.
And if something comes up, drop everything you're doing and look at this.
Right.
Gotcha.
Okay. Now, the last audit section we have are program and single audits. And generally, those are audits of grants or specific programs. Now, the federal government is, really came up with some acronyms that I don't know that they really necessarily thought through. Generally accepted government audit standards, the acronym for that is GAGAS. And the acronym for the single audits the single audits are under the Uniform Grant Guidance. The acronym for that is UGG. So, sometimes you got to wonder if there's a little bit of fun that goes on when they come up with this. But single audits are basically audits of grants. There is specific guidance that the federal government has put out on how they have to be audited, how they have to be selected, what the sample sizes are, et cetera. Now, the sample sizes are determined by the AICPA, however, in consultation with the government. But the government basically says this is how you have to do it. So, for instance, if you're auditing the federal funds of an organization, you're either having to cover 20% of the total expenditures or 40% of the total expenditures. That doesn't mean you're auditing that much, but you have to cover programs that cover that much. Okay, and then you have to look within the program, and there are about, I think now, 10 or 12 specific compliance areas that may be necessary to audit. In some cases, you audit all of them. In some cases, you may only audit 2 or 3 of them. That is a specific type of an audit that has to be done. And there are specific ways of picking the programs that have to be looked at in a given year. So that's what the program and single audits are. And again, these are primarily compliance. You either complied or you didn't. There's no gray area. Okay, it's not like a financial audit where, well, we have this adjustment, but it's not really that big, so we can pass on the adjustment. No, here it's either you did it or you didn't do it. And then the last thing that we had in here was consulting services, and that's basically, where you have a specific problem or need and you want somebody to take a look at it, and how can we best do something? A good example, if we wanted to reorganize the Commonwealth, how would we do it? What's the best way to do it? That's a consulting service. So,
I'm sorry, go ahead.
so that's basically all I had necessarily to present.
What I wanted to bring up, Dan, and now the reason for tying them in, there's a new standard called the CGMA, Chartered Global Management Account, that's come out for industry CPAs, that's really designed to tie economics and accounting together in the process. And the professions do, and that's the reason to have both the independent fiscal office and the auditors here. What I just wanted to ask kind of as a wrap-up question and run around is, it's a standard question I ask when I'm as an audit committee chair. Is there anything that we haven't asked you today that you think we should have to be in terms of concerns? That's the question you guys always tell me to ask, right? In terms of what we should be asking you as a legislature to improve the financial controls. And again, our goal here is to be bipartisan. It's not intended to develop a either conservative or liberal platform, but to say, what can we do from a financial controls perspective? Because if the beginning number, Matt, that you're using on your slide one, it's telling me that we've got a fairly significant structural shortfall potential. And if the beginning number's off, that makes that number even significantly, and that's some of the thing that's occurred in the past. We've got a lot of structural issues that are happening in society. We talked at a testimony that you did that was absolutely brilliant, I think the world of your department, where the comment was about we don't know yet the impact of internet pricing in terms of impact on overall sales tax revenue. None of us will know that. These are issues and variables that occur in any dynamic economy. So the question kind of, again, goes back to that wrap-up question. Anything that kind of keeps you awake at night that you think that we should be looking at as well? Matt, I'll start with you.
Sure. Well, I just highlighted some of the findings in the report here, and these trends, you see them taking hold right now, and they're not going away. They're going to, in fact, some of them are going to increase in their impact. So one of them is demographics. Other things are such as technology, and all of these things, unfortunately, from our perspective, are largely working in the same direction, and that is to erode the tax base, in which case it's difficult under the current system to generate sufficient revenues to meet the needs of the programs that are currently in place as they are defined. And so if you look at our projections, what you'll see really is two parts. One is there is a structural shortfall that's really left over from prior years that's been carried forward. Having established that, then there is a divergence in the growth rates from that point. That's not as extreme as in prior years, but it's still there. So I just highlight that left to its own devices without any changes, we do think there's a shortfall from prior years, and these are past policy decisions that lawmakers have to deal with now, but there's also the part moving forward where you have a divergence of the growth rates between revenues and expenditures.
Fantastic. Thanks. Jim and Keith.
Well, from an auditing perspective, the issues, well, first off, understanding the financial statements, having people know what they're looking at, because again, government financial statements are among the most complex to understand because of all the moving parts that are going on. But with that said, within the financial statements, if you remember a couple of years ago, we implemented a standard regarding pensions, and that standard required all governments to start reporting their true pension liability, all right? Well, there are two retirement pieces out there. One is pension, and the other is what we call other post-employment benefits. And the standards on those two tend to leapfrog each other, okay? One happens, and then 2 years later, the next one says, me too. Well, the other post-employment benefit standard is going to be hitting next year. And that is going to create another huge liability on the Commonwealth's books at an entity-wide basis, if you will. And that's going to require funding down the road, and the question is, how is it going to be funded, and where's the funding coming from? Because other post-employment benefits was one of these things that nobody ever really paid attention to. It was a retirement plan, but it was never a written retirement plan. So everybody kind of said, it doesn't really matter. But that's going to be hitting, and we anticipate that's going to be a big number in organizations throughout the country. It's not just going to be the Commonwealth, it's going to be everywhere. Right. So that's going to be huge. The other issue that we always get concerned about, and again, not the Commonwealth, but just in general, is the reliance on federal grant money and what happens if. How dependent are you on grant money? And as that grant money goes away, or as it gets pared back, what happens? And as, as things happen at your level, they're also happening at the levels below you. And so that creates an additional strain generally on the upper levels, because now you're getting pushed from the top and people from the bottom are trying to make up their shortfalls as well. And so that can affect things like, the ability to increase revenues or the need for additional expenditures. And so those are the types of things that, from a government perspective, can be very concerning.
Matt, just as a general question on that, were your numbers looking at the post-retirement benefits, other retirement benefits? So you're including that
So
already?
we're built in, we have some projections from the PEBTF, the Employee Benefit Trust Fund, and the expenditures related to that.
Fantastic.
And
Any questions?
yeah, to follow up on that, is that looking at what our trends are, because Medicaid and Medicare and the healthcare costs are going, the exponential growth I mean, it's not just simple percentage rates, we're growing at an exponential rate. Is that basically where you're leading with this, and how do we know that, because nobody's really been able to predict 5 years ago where we were going to be with these expenditures?
Well, the actuaries, actually, if you read an OPEB actuarial report, the healthcare assumptions, the healthcare rate assumptions are interesting, let's say, because, as you said, nobody can predict what's going to happen, and so you have to predict something. But generally, those rates are not what, if you were to look at the rates and compare it to what's actually happening now, you'd probably say, well, this doesn't make any sense. But if you use the rates for what's happening now, it would be unsustainable, or probably unsustainable in a future year. So you have to use something. When other post-employment benefits were first offered, healthcare rates were not where they are now. And I don't think anybody really thought about the 10, 15, 20 years down the road and what was going to happen when it really kicked in. Well, now it's really kicking in, and people are having to deal with it.
And I just, on that, just the increasing longevity and the bills related to that, and that's just going to continue as well.
My kids are hoping that doesn't happen.
Well, I'd like to catch up on a couple of questions. If you're going back to page 3 of your report, in looking at accrual versus cash flow, one of the things in the SAP system, just one item that I was really paying close attention to, is we have separate line items for each year's budget on individual programs. County youth or children and youth programs, for example, I noticed there was $6.3 million that had not been transferred out of 70 from the end of the fiscal year over the beginning of the following fiscal year, and the SAP report at the end of June of this year. I brought it up in a hearing, and subsequently that report shows that that money was now lapsed. And I'm trying to figure out how that happens, and if that now opens up a whole nother can of worms in that they had to move that, where do they have to show that money again? And is that more in line with something that would be possibly a forensic accountant taking a look, a forensic examination of that account? Or, because I know that, again, I'm looking at the SAP report, and that's...
A lot of time, and I can't speak to that specific situation, but you have to understand that the accounting process throughout the year is not, what's here today is going to be there tomorrow.
Yes.
It's a fluid process, and depending upon where the reports are that you're looking at and where they are in their process, you may not, and again, I don't know exactly what you're looking at, but you have, your usual first 12 months of the year reports.
Right.
Then you have your closing reports. Then you have your post-closing reports, then you have your adjustment reports, then you have your rollover reports, okay? And each one of those may show a slightly different number because of where you are in the process.
Yeah,
Okay, so, and again, I don't know that that's the
They
case.
divide those SAP reports up into 16 periods
Right.
out of a 12-month year, right? And there's all kind of different adjustments that happen in period 13, 14, 15, 16, and 0.
Yes.
So, you know, in that case, if you were looking at a budgetary report, you know, for May or June, that 70 million may still be appropriated and budgeted in SAP at that point. If by the time we get to period 16 and we roll over into period 0, if there's nothing spent against that appropriation and there's nothing sitting there for a future appropriation,
Yes.
the period 0 report that budgetary appropriation's gone. It's not part of the next fiscal year budget if it wasn't extended.
That's
or-
why I was
So
asking
those things often,
specifically.
in our governments, they often will lapse when we reset those
I
rollover.
look
May
back,
I ask one thing that I want to be careful about? What I'd like to try to do with this one is keep it global,
Okay,
because
yes.
we're going to have a separate meeting.
Yeah, because
where
we
can-
can't speak to that specific
Right, and so
county
what
and youth, but
what
I
I was
mean,
gonna,
to Keith's point, depending on where you're at in the budget
Right.
cycle of looking at that,
gonna say.
yeah,
Yeah, the reason I was asking is that it was the same, specifically asked for the same period report, and it was from back in 2015-16, which is why so, again, you've just given me something where I had a little bit more information on where and how we need to examine these things. And the accrual versus cash flow dichotomy is something that really does make it hard as a legislator to actually keep track of this stuff. And it's one of the reasons why I'm glad you showed us the difference between all these different tools in the toolbox, so that when we are trying to craft this type of legislation, we can look at some things that will actually zero in on specifically what we want to do without costing the government a whole lot of extra money on top of it, so.
or even more importantly, get what you actually want.
Exactly.
We have so many governments, we have so many government contractor clients where they say, hey, we have this contract with the government, it says we have to get an audit. They're going to take the cheapest, most efficient route to getting that audit done, and it may or may not address really any of the objectives that you actually set forth. You just thought you were doing the right thing by saying, let's require an audit.
that's what actually triggered this meeting today.
Yes.
And to Jim's point, real quick on that, you know, I've got one client that, it's a county client that says all nonprofits that get grants have to have an audit done. Well, I give a nonprofit who's got $100,000 a year budget, $10,000, and you've got a provision that says they have to get an audit, and that audit is gonna cost them anywhere from $5,000 to $10,000. So at the end of the day, you've given them the money so that they can give to their auditor, when they don't necessarily need that. And that's part of the reason why when you put legislation together and you say audit, you have to be careful, because you can end up with some super huge unintended consequences.
Let's go ahead and do this in terms of wrapping it up. I wanted to thank you very much, and again, Matt, Stacy, and Jim, and Keith, thank you so much for being here. For the members, thank you, Seth, Chris, and Dawn. I appreciate you being here as well as the film crews. This is incredibly helpful. Happy Thanksgiving. I just wanted to bring it up and just conclude by saying the purpose of this was to give us and arm us with the tools of how we can utilize the information you're doing and have provided for us from the audit perspective. The budget outlook, Matt, has been absolutely superior document. Really gives us, I think, a good idea to see, Dawn, with the work you and your team were doing this summer about pulling this together to make sound policies. And as I started to see what people were asking for in terms of audits, we thought perhaps it would be a good idea that we had a better understanding of perspective. We are drafting some legislation, so this would codify this, so that people would be much better aware of what's available, so that if they're looking for one piece of information, they might want to do this versus something else. So thank you for your time today, and I know it's been a long, grueling process, but we appreciate your time and your efforts. And thanks again for seeing us the day before a holiday.
Thank you all very much. Thank you. Appreciate it.